BigBear.AI just reported earnings. BigBear.AI, they missed expectations and EPS came in at negative 12 cents versus the negative 8 cents, which was expected. That is roughly a 50% bigger loss than analysts were expecting. So naturally, investors are going to be asking, is something wrong with BigBear.AI, or is the market completely missing the bigger picture of this stock? So let's break this down, guys. And if you do want more breakdowns on stocks like BigBear.AI, CTM, SoFi, you name it, I'll cover it. Please comment below what it is you want to see in future upcoming videos, as I do love giving the content you want to see. And always feel free to hit the like and subscribe button if you do enjoy my content. So let's start off with the headline, and we got to keep it real. So it was not catastrophic like we've seen in other quarters, but it still was a miss, and people did want to see something better. So overall, the whole report, again, you can just go on the website BigBear.AI. You can just look it up, and then you just you can go on, click on the PDF. You just check it out, and it'll have all the information for you right here. So first off, their expected EPS was at negative 8 cents. The actual EPS was at negative 12 cents. And that's a 4-cent miss of, again, mentioning it's 50% larger than they were expecting. And on the surface, that looks bad because this tells you the company is losing more money than Wall Street thought. So where a lot of people get this wrong is for a company like BigBear.AI, EPS is not the main metric right now. And this is not a mature, highly profitable company yet, as me and you both know. This stock is very volatile, and this is a growth AI defense focused company that's still scaling, and they still do have a lot of questions that they need to answer to the market and to all the investors in the market. So what I want you to guys to always understand is that the things that really do matter, especially when we're taking BigBear.AI into consideration, is ask yourself and look and analyze, check their revenue growth, which we do see here. Revenue for the fiscal year of 2026 for Q1 is 34.4 million. And as they do see right here, gross margins expanded 1,278 basis points from 21.3% to 34% year over year. So that is improvement. You do got to see if they've been gaining more government and defense contracts. So analyze to see if they have been acquiring those or not. Next, and I did hear this talk about in the live's earning call that they had, check their backlog to see has that improved, and it has. As you do see here, backlog, it increased 14% from the fourth quarter to $281.9 million. And to go in more detail, it does say that it was primarily driven by a sole source prime classified award in the first quarter for $53 million. And then you also got to check the forward guidance to see if they have more of a positive outlook or a bearish outlook. Now, I want to be real for a second. Is this miss is not meaningless, because if they are getting worse, that could mean costs are rising too fast or the business isn't scaling efficiently. And that is something that investors are watching very closely right now. Now, when we look and just do a quick scenario, when we take into consideration both sides, the ones that are looking to long or short this company, and people that are either more pessimistic or optimistic of the stock. First, let's go on the pessimistic side of things and look at the bear case for the stock. The bear case is simple. They're losing more money than expected. Profitability is getting pushed further out, and this could lead to more pressure on the stock in the short term, because eventually these companies have to show a path to profitability. Because even for a company that is hyped up like BigBear.AI, if they continuously quarter over quarter and year over year keep saying that they're going to promise to deliver on this, show profitability, whatever it is, investors, they don't like to see a company that makes promises but doesn't deliver and actually stand in alignment with what their words are saying. They want words that are followed by actions based upon what words were said. Now, when we look at the optimistic side of things for the bull case of the stock, People that are more bullish view this more as just short-term noise. If you enjoy my content, please hit the like and subscribe button. And if you ever need help making better decisions with investing, simply take a look at the first link below to get access to my community and support yourself with like-minded investors and get access to the world's leading AI models, Claude, Gemini, OpenAI, and Grok. Get all of this software for $7 in my community, and my community is free. And the reason that people view this as just short-term noise and they have more of a long-term horizon, like there are people that scale their thought process as long-term investors to many years down the road. To give an example, one of the things that I do hear a lot of investors in the market say about BigBear.AI, just to give an example, is a lot of people do know that BigBear.AI isn't just a defense company. The actual full story is, since they are an AI decision intelligence company, and that can apply to ways that is more than just the military. They're one long-term potential catalyst that a lot of people have been talking about is the FIFA World Cup, because when you think about it, it's a massive global event, millions of people, logistics, security, data, and they need real-time decision making. BigBear.AI is a company that could be useful for those sorts of things. So the people that are viewing this as just short-term noise are looking to long-term events and long-term reasons as to longer-term catalysts that can, or events that can act as a bullish catalyst to eventually turn this stock parabolic and move it to the upside. And I also want to point out that if BigBear.AI is growing revenue, is winning government and defense AI contracts and positioning itself in the AI space and continue to doing so in the way that they have, these investors may look to this and say, we don't care about the loss that we experience today. We care about where this company is going to be in a 2 to 3+ year time frame. So what you need to watch going forward is revenue going to continue to grow? Because even though this was a miss, it does show here that there was growth year over year. And are they landing new contracts? You do see here that they were awarded something earlier in the first quarter for which was worth $53 million. Is forward guidance strong? And most importantly, are losses starting to stabilize over time? So yes, BigBear.AI did miss earnings, but the real question isn't the miss. It's whether this is a temporary setback or a sign of deeper problems, and that's what's going to decide where this stock goes next. So let me know in the comments, do you think BigBear.AI is a buy here, or is this a stock with too many red flags for you to put your hard-earned capital into it? If you enjoy videos like this, please hit the like and subscribe button and comment below what it is you want to see in future upcoming videos. Besides that, guys, stay safe. Keep making good decisions with your long-term portfolios. I'll see you on the next video.